So Stripe has done some amazing things, like you mentioned, where you ultimately log into the Stripe UI and they show all the payment methods, international payment methods, and you just toggle. You just click a button and you can get access to the payment method, which it's pretty revolutionary for small merchants. I had a project that I worked on for about 6 months, and within the first month of what they paid me to act as a consultant, I saved them almost 10 times that amount in revenue because I helped them negotiate their fees. I still think a big challenge in payments is that it's very expensive to use credit cards from a merchant perspective.
Today, my guest is Jenna Wyer. Jenna is a FinTech veteran, and she has been a founding member of Venmo and Braintree, which were both acquired by PayPal. Previously, Jenna was on the founding team or an executive in multiple other startups, including Lemon, Spreedly, Recurly, and Thunes. While building 5 FinTech companies, she also raised 3 children with her husband. She was born and raised in Chicago, but she lives right now in sunny Scottsdale, Arizona for the last 16 years. Jenna founded a creative studio in 2024, and she is also a payment consultant. Jenna is also joining the iPayout team in 2025. In this conversation, we spoke about the global trends in payments, the challenges of the subscription businesses, the new era of cross-border payments, the payment orchestration, and the role of the payment consultant. With this, please welcome Jenna Wyer. Hi Jenna, thank you so much for joining us today.
Thank you for having me.
We met at Money 2020 conference this year, where you were a speaker and actually a well-known expert in the payments world. Maybe that's the first question. What are your observations on the trends and main topics of Money 2020, or just in general on the payments industry? Like what's happening right now and what trends do you see?
I've been attending Money 2020 since its inception, since its very first year. And I feel like every year, Money 2020 has their buzzwords, right? One year it was omnichannel. One year it's crypto. And I feel like this year there were a few trends that I witnessed and saw in various panels and just overall in the sessions that they have. And, crypto is still kind of part of the conversation right now. Bitcoin's worth almost $100,000, right? So it's a pretty hot topic now. I'm still a bit skeptical whether or not people will actually transact via crypto, though, especially because of the value of the Bitcoin. But I think a big topic was bank account payments, right? A to A, account to account payments, right? I think for many years, when I'm interviewed, people ask me like, what in payments needs to be innovated upon? And I, every year for probably 10 years, have been telling people credit card processing fees are too high, right? I mean, we see this in the news. There's been legislation around how to get credit card fees down. I think the biggest merchants of the world, right, like the Walmarts of the world, are always trying to find ways to get merchant account fees, especially interchange, which is the wholesale cost of credit card processing, down. And it's never been easy, right? I think, especially for small merchants, they're still paying anywhere around, 3 to 4% in credit card fees. And if you're a really savvy merchant, you'll go and make sure you negotiate those fees down. But it's still a big chunk of your revenue. I think the biggest challenge in account-to-account payments was the user experience, right? Like how do you make it show up in checkout where people can easily fill it out, and then you can make sure people are actually going to click the button and check out? Because I think credit card payments is still a little bit more intuitive for people who are shopping online or via mobile. So that was a really hot topic this year of, how are we going to facilitate account-to-account payments? Obviously, everyone, knows the big players who are doing it, but the likes of Stripe are pushing that payment method more. Go Cardless is a very well-known kind of global account-to-account player. We've seen other kind of competitors pop up, though, over the past year or so.
When I'm looking at the market and available payment methods, I see these account-to-account payment methods can be the case for investing apps or maybe other fintech services, but I don't see it as the payment option for many transactional businesses where you want just to go to like online store and buy something right now.
It's a great point you bring up, right? It's not something that consumers are used to yet. I don't think the typical consumer, especially when you talk about like the different kinds of generations that are purchasing online, right? I have daughters in their 20s and they use Apple Pay everywhere, right? That's just how they transact when they're at point of sale, when they're online. It's like if they don't take Apple Pay, then they're probably not going to buy it. However, if you think about maybe the older generation, there was a time where people were afraid to even type in their checking account information online, right? They thought, my grandmother, for example, when she was alive, she'd say, I'm not typing that in. Like, what if someone can steal that number? They can steal all the money in my bank account. Where credit card for her was a little bit more safe. She knew she had more protections with credit cards, right? And so I think not only is it the user experience that's still a little bit tricky, I think one, digital wallets, right? The adoption of digital wallets where you can store multiple payment methods, that has to become a little bit more adopted, I think, for you to see mass adoption of this account-based payment method, right? So Shop Pay, right? Like Shopify has done a really good job of this. If you've shopped on a Shopify website and you've kind of filled out one of their wallet UIs, you can store different types of payment methods in there. And so when they recognize you again, right, you get a text message, hey, we see you're buying here, type in this authentication code, and then it'll show you the payment methods that you want to buy with. So I think if we can get more wallets that are easily adopted by consumers that can store a credit card and a bank account, it's got to be a no-brainer. I think we've learned this, right? Like the more friction at checkout that you have, the less likely someone's going to buy. They'll either abandon the cart or they're going to use a payment method maybe you don't want them to use, right? And so I think kind of going back to the original part of this conversation of account-based payments being something people are looking at, that at the end of the day, merchants are just trying to get their cost of processing down.
Let's talk a little bit about the subscription business. With your extensive experience in the subscription business with subscription platforms and subscription merchants, what's your take on the state of the industry right now? Do you think merchants will be continue interesting into expanding their existing subscription offers, or merchants who are not in the subscription yet will be moving to subscription?
So my answer is going to be it depends. And it depends on how the economy does over the next year, right? We have a new administration that's going to be taking office in a few weeks. And the economy, I think we all can admit, it has not been great, right, over the past few years, which can often cause subscribers or consumers to actually decrease the number of products they subscribe to, right? I always feel like subscription products are a bit of like if you have excessive money to spend, right? If you have, perks like a beauty box you want to receive every month, you will probably, pay for that if you have extra money to spend. But in an economy where, you're just trying to make ends meet, the first thing you're going to do as a consumer to budget your income and expenses is probably decrease, if not cancel, the subscriptions that you don't feel are useful to you, right? I think an anomaly for all of us, though, is like we all pay for Netflix, right? Netflix is probably it's like $27 a month these days, but we find value in it, right? We all come home and need to be entertained. So if you are a product that is priced correctly, that consumers view as almost like a necessity, no matter what the economy is doing, I think you'll subscribe to those things. So it'll be interesting to see what happens with the economy over the next few months. And, something that I saw, because when I was kind of in the thick of building a subscription product, it was actually in COVID. And COVID was a really interesting time because although we were locked down, we couldn't go a lot of places, the economy was quite good in COVID, right? And so we saw a spike in subscribers buying more products, staying very loyal to products, especially during a time where it was a funny time because we couldn't get access to things like toilet paper, right? So we saw a spike in toilet paper subscriptions because people couldn't get it in the store, but if they subscribed to a toilet paper service, they knew they could get it every month, right? So it was just a strange time in the world, but also a strange time in terms of the trends that we saw in subscriptions. So it was a very rich, robust time for subscription companies. They were doing very, very well. And then now that we're kind of in more of a down economy, I think people are a little bit more leery, right? They're not going to subscribe to things that maybe they just don't need, or they're going to be subscribing to things that just don't cost a lot of money. So in terms of what consumers will do, we'll see what the economy does to see what, if people have extra money to spend. In terms of providers, though, I think we may see some consolidation in providers, meaning, I think there's some there's like a top 10 subscription platforms, right? The likes of a Zuora, Recurly, ChargeBee, Vindicia. And then we have all of these other kind of like niche players that have popped up that do, some only do B2B payments, some only do Shopify like payments, right? Where Shopify has a marketplace where you can find some subscription players that can help you do physical goods subscriptions. So you're seeing more and more niche players pop up, but I think you might start seeing some of the smaller players getting scooped up by the bigger players that want to find some, I guess, variety in the types of products they provide.
What advice would you give to subscription merchants for them to try to keep their existing customers and to engage new customers in this economy, or considering if the economy will stay like relatively the same?
Mhm.
Are there any like tools or techniques or processes they can implement or focus more on them?
I would say number one, in order to retain customers, you have to be flexible in terms of how your subscription platform works. So a good example of this is in COVID, uh, movie movie theaters had subscriptions, but of course in COVID you couldn't go to the movie theater. So what happened? For those movie theaters that didn't have very flexible platforms, people were canceling their subscription. There were other platforms, theater platforms, that said, hey, we're going to offer you the chance to pause your subscription, right? So if during COVID you can't go to the theater, at least for the next 3 months, you can pause it. And then when you're able to go back in, you can start it again. Those movie theaters actually did quite well and were able to retain customers. And I think that pause feature is so, so important for subscription platforms. And people need to pause for various reasons, right? It could be you lost your job, you need to pause. You're going on vacation. You don't need a box to show up at your house for the next 3 months if you're going to go to another state, right? So you need to give the consumer flexibility to say, hey, I'm not going away forever, but I just need to go away for right now. So pausing, I think, is an important kind of strategy to retain your customer. I also think options, meaning if you are have ever subscribed to a product and you start thinking, I don't really need it, and you go to cancel, if you've ever gone to kind of that experience where they offer you options like, hey, we're going to give you 25% if you stay for another 30 days, right? Or we're going to give you an upgrade if you keep it your current plan, but you stay with us another 60 or 90 days, right? So if you can offer them options, and ChargeBee actually has a very good kind of, it's called voluntary churn retention tool. They have a very good tool that they have where if you try to cancel something, they offer you all these things you can do before you actually will go ahead and make that choice.
What do you think about the usage-based billing? Do you expect that industry will be shifting towards usage-based billing a little bit more?
That's an interesting concept to charge for what people use. I think it depends on the type of product, right? Whether it's, if you're using a voice over IP product, right, where you're making phone calls, people like the idea of paying for something and getting unlimited use. I think there's value in that, right? If you pay $10 a month, but you get all of this stuff or all this time you can use, the product doesn't seem that expensive, right? So I think usage-based billing is a little bit of a double-edged sword where although maybe it can help a merchant make more money, it also can be perceived potentially as nickel and diming your customer, right? Like, do you really have to charge them for every show they watch on Netflix, right? Netflix would have never taken off if you were billed for every show you watched, right? The whole point of it is you pay, you get as much as you want. So I don't know. I actually I don't think it'd be a great idea, honestly, for merchants to do that, especially when people are being like super cost conscious. They want to pay a fee similar to like cell phones or mobile phones, right? You pay $99 a month and you use it, you text, you call as much as you want. I think that perception of value is still important in order to keep people subscribed to something.
Okay, let's switch gears a little bit and let's talk about the cross-border payments.
Okay.
The industry is changing quite quickly, and we're allowing more and more different ways how businesses can accept money internationally. What trends do you see right now, specifically on the cross-border payments?
So I think there was a time where only the big companies, the big merchants, could really venture into alternative payment methods, right? So, as a domestic merchant in the US, for example, if you were a small business, back in 2010, 2011, you could only accept credit cards, right? Even if you had consumers or users in Europe or other parts of the world where Visa, MasterCard are not the predominant way to pay, if you weren't big enough, you just couldn't get access to that payment method, right? So Stripe has done some amazing things, like you mentioned, where you ultimately log into the Stripe UI and they show all the payment methods, international payment methods, and you just toggle, you just click a button and you can get access to the payment method, which it's pretty revolutionary for small merchants, right? Because there was a time they just couldn't get access to it. However, the question still is like, how savvy are merchants as they're small and grow around what payment methods they should even accept, right? I think if you're a small merchant and you launch, say you sell shoes online, right? And all you know is credit cards, especially if you're a person who's American, raised in the US, right? All you know is credit cards. Unless you've been born or grew up in another country, do you know, hey, there are these other ways to pay, which very often in Europe, for example, right, are actually account-based payment methods, right? Credit is like this huge thing in the US, right? Since when you're very young, you just learn everyone has a credit card. So we're not very good at this country in terms of spending money we actually have. We like to spend on credit. Whereas other countries like Europe and even Asia, they don't necessarily have that same culture of spending on credit. So they're really good about really only spending the money that they have. But you have to really understand your consumer base and where people are purchasing to know, should I actually be launching support for something that's not a Visa or MasterCard? So many years ago, I consulted with one of the biggest media streaming companies in the world, multi-billion-dollar publicly traded company. And when I went in to help them with some of their like international optimization, because they were mostly taking credit cards globally, I was so surprised to hear that such a big company was not super savvy around alternative payment methods. They just assumed every country had credit cards, Visa, MasterCard was good. But when they were launching in certain parts of the world, they were noticing they were not having the conversion that they wanted at checkout. And they couldn't understand it. At first, they thought, well, maybe our offering's not great, maybe our pricing's not right. But as we kind of dug into the data, what we realized is they just weren't offering the right payment method, right? And once they turned on the payment method, which isn't always available through your current provider, right? So you have to go out and be a little bit savvy to shop and know, okay, who is actually going to offer me this payment method in that country? Do you actually start to figure out like, how do I actually get conversions and also offer just a more robust offering across the world? And so yes, starting with Stripe is great, right? You get availability to lots of features. It's a super slick, sexy UI. It's very easy to integrate. But the question is, often you need someone to kind of coach you through, where are you selling your product? What types of payment methods are you accepting? And are you actually optimizing not only the payment method, but also the price to process payments when it's not necessarily only domestic or in the US?
There are different models of processing international payments more efficiently,
Mhm.
like cross-border. So there is a way where, like with Stripe or with Adyen or with other kind of like all-in-one
Mhm.
gateways, you're just enabling this payment methods, right? And you're accepting payments through like a cross-border rails, or you can go locally and basically opening your local entity,
Mhm.
but it takes time and effort to go in all these countries. What's the strategy you would recommend for businesses who are again like located in US or Europe,
Mhm.
but they want to accept payments like in Latin America or like Asia Pacific regions and don't pay high premium
Right.
fees on these?
It's true. It's a good point to make, right? You can process payments for a consumer not based in the same country as you, but it's costly. However, when you're small, sometimes you don't care about the cost, right? You just want to sell your product to that person in Latin America, for example, so that you can build up some brand reputation in a region. So you'll pay the cost of payments for a period of time. But it can be very expensive to have true local presence, right? Because typically when you're signing up for a merchant account in a certain country, there are a few requirements that you need to have. One is a local office. You typically have to have, similar to what we have in the US, like a tax ID, right? You have to pay taxes in that country, which also requires not only do you have an office, but you then have to have a paying employee in that office, right? And usually in some situations, you need an officer or director. Like it can't just be an admin. You have to have an actual person there that holds some clout in the company, actually work in that office. And if you're a small business, based in a country, that is going to cost you tens of thousands of dollars, if not hundreds of thousands of dollars to actually set up that entity. So there are a few solutions that are available that weren't available probably 10, 15 years ago, right? Which is the concept of merchant of record. So there are companies similar to a Digital River or another company called Reach that actually helps you set up an entity in the country, and or you use their entity in that country. Again, that can be a little costly though, right? It's not the cheapest way, but it's probably more effective, especially as your volume grows and paying high cross-border fees, right? To actually process in one currency and then settle in another foreign currency. So there are some options that you have now to set up foreign entities, maybe not on your own. I would say usually setting up those entities on your own and truly handling that local entity on your own is usually reserved for the bigger companies that just have more revenue and money to pay for a setup like that.
There seems to be an interesting conversation in the industry right now about the two different approaches of processing payments using one gateway for everything, like Stripe or Adyen, for many different tools, many different payment methods, and like including fraud and taxes, or like utilizing different approach of using like an orchestration layer and going the multi-processor route. Do you have a preference to like one approach comparing to another?
For me, I feel like competition is always good. Having competition is always good, right? And when you're a merchant and you have one provider, it's hard to negotiate, right? Because they know they have you. You're their only source of payments, and so they're less likely to budge in terms of fees, even contract terms, when they know there's no one else they're competing against. So when I go in to consult with companies, I often tell them they should have redundancy. And remember, things break. I mean, Stripe has outages, Adyen has outages, right? Every big payments company, CyberSource, which is owned by Visa, has outages, right? So just from a pure redundancy and business continuity perspective, in my opinion, I think every business should have two providers for payments, right? From not only if something goes down, but also it gives you more wiggle room when you can tell a merchant account provider or a payments provider, hey, I've got like one or two other providers, and what you're giving me just isn't that competitive, right? And so from a business perspective, it's good to have multiple gateways. But also, the truth is, not all gateways and payment providers are alike. They all are kind of focused either on a niche, on a segment, on a particular type of merchant. Although Adyen and Stripe compete, they're very different. They're very, very different in how they've built their platforms, how they've acquired companies, and also the types of merchants they support, right? Adyen usually has very big merchants. Stripe typically, although they talk about being enterprise, I would say predominant part of their portfolio is still SMBs, right? Small to medium-sized businesses. So I've been building orchestration platforms since 2013. And 2013, I don't even think people were really thinking about payment orchestration because they still believed one gateway was good enough. But gateways are not the only places payments are processed. And so the use case I'm going to give you is the travel industry, right? So if you are an airlines, for example, or let's say you're just a travel platform like Expedia, that's probably a better example. If you go to Expedia, you can book a lot of things, right? You can book an airline ticket, you can book a hotel, you can book a rental car, and you can even book excursions, like things to do when you go travel to another country. The consumer never really thinks about how is that occurring. But if you're a payments geek like us, right, you're like, okay, how the heck is all that data getting to all these different providers? And what we know about PCI compliance, right, is like you can't just have credit card data flying everywhere, in an unsafe fashion. So how are you gathering data in one platform and getting all that data to all these different entities that have to provide different products or services, right? And they're doing it through payment orchestration, right? They've done various integrations to different APIs that make sure that the credit card data, number one, never touches Expedia, right? But is somehow securely passed from that checkout page to maybe 5 different providers, right? If you're scheduling a vacation, for example, you may have that experience where you're booking multiple things. And so I think that was kind of the genesis of when people started thinking about how do we build these layers to keep merchants safe, keep consumer data safe, but get data to different places. And so orchestration has just built multiple layers on top of that, on top of just travel. Now orchestration layers even are optimizing the checkout experience based upon location. So there was a time where you had a checkout page that was good for everyone. No matter where you were as a consumer, they showed you one checkout page. But orchestration layers now have locality capability. They know Jenna's in the US. So they're going to only show Jenna US based payment methods. But Nikita could be traveling. You're in Europe right now. And so they're thinking, if his IP address is in Europe, he may be a European. So we need to show him not only the credit card based payment methods, but maybe we should show him the European based payment methods first, because that can increase conversion. So I think orchestration layers are becoming even more important these days. I think it also depends. A lot of my answers are it depends, because if you're small, maybe that's too much. It could be overkill, right? You're a small merchant only selling to you as consumers. You're probably good with Stripe for a while. But if you're growing and you have multiple products to sell, or you have multiple third parties you need to fulfill your product through and need to get credit card data to, that is when you start thinking about needing an orchestration layer, because they handle a lot of that credit card security that you as a merchant probably don't even want to deal with.
What is your opinion on Stripe opening their vault by introducing the forward API? So it feels like a kind of like a hybrid approach. Do you think that it's something feasible that merchants will use in the near future?
It is. And Braintree did something similar many years ago, actually. Braintree didn't do a lot of PR around it. They kind of, I would say, quietly launched what I will call like a multi-gateway API, where you could use them for processing, but also plug in another gateway so that you could use multiple processors kind of via Braintree. That news about Stripe is very telling, actually. And what that tells me is they really want to go enterprise, because small merchants don't necessarily care about orchestration, like I said, but the big guys do. So if they want to win, the likes of a Walmart, the likes of some really, really big global retailers, they would be silly to think that Stripe is going to win all the volume, right? Stripe's not an acquirer, by the way, right? They're not an acquirer. So there's still some optimization and pricing benefits that merchants are going to get using other PSPs. So yeah, it's a very interesting thing that they chose to do, which does tell me they're more focused on the enterprise, and they want to build really a more flexible solution. It's also a good way to win new customers, though. So when you allow multiple gateways to be integrated into your platform as a PSP, you give people the ability to test against another provider. So very savvy merchants will basically test two different providers side by side, right? So they'll process similar transactions in similar countries, and they want to see the data. What's the conversion rate? What's the decline rate, right? They want to know who performs better than another. And it's very hard to win that race unless you have a really good, robust platform that lets you compare that data very easily for the merchant. And so that's what Stripe's doing ultimately, right? They're saying, hey, use us, but hey, use another processor too. And they feel very confident, obviously. We're going to show you that we can outperform a competitor. So it's a great idea, especially if they want to go on market.
In my opinion, it's one of the biggest and the most interesting events of this year.
Agreed.
Generative AI, such as ChatGPT or similar, has been very, very popular topic this year. But application of these tools in payments, I feel it's still relatively narrow and mostly limited to operations that previously included some labor. Do you know about any applications of Gen AI in payments, or how do you think Gen AI can change payments?
Yes, I mean, it's a big topic, right? AI in general is a big topic and buzzword that people are using these days. And I think the concept of machine learning has actually existed in payments for a long time. And when I say a long time, within the past decade, various payments companies have worked on their own kind of closed loop machine learning products for many, many years. A good example of this is Recurly, right? I was at Recurly for 3.5 years, and they built a revenue recovery tool that was based on machine learning. And the reason that tool was so robust and it worked so well is they had been around for over a decade. So they basically had over 10 years of data from some of the biggest subscription companies in the world, in that they were able to build machine learning to ultimately learn why transactions were failing, right? And so if a transaction failed for insufficient funds or fraud, there's basically over 100 reasons cards can fail, where Curly had created some smart logic around when we were retry a card on a certain day or time, we can increase the chance that card will actually be successful. And they did that for years, right? Like I said, over 10 years, they built that machine learning. There are other companies that have done similar things, right? Adyen has built some really robust kind of credit card processing optimization tools. Not only do they know where and when to charge cards to when they're most optimized, but they have multiple processors they've integrated to know, hey, if we process this consumer transaction with this processor, we have a higher chance it's actually going to go through. But it's all closed loop, right? So each provider is kind of building their own thing. What could be very interesting, right, is if from a generative AI perspective, we open up this data all of these providers have collected over the past 10, 15 years and started to create, right, a more universal payments API to help people optimize, because payment optimization is a big topic. That was another kind of buzzword and Money 2020, right, is like, how do we make sure cards are always being approved as, you know, as much as we can, right? Because that's the biggest, I think, challenge for any merchant is card failures, fraud, and chargebacks, right? That's why they're not making as much revenue as they want. So this concept of machine learning has been around a while. It's not new, but the question is, how do we get the data consolidated, right, to where all these different providers that have gathered this data can now create, you know, ultimately these tools that the masses can use. I think for me, one of the most interesting parts of generative AI is the concept of predictive analysis, right? Is how do we know how things will happen or how consumers will behave based on data we collect on them? And so one thing that has always been interesting to me is, you know, NSF, insufficient funds, is a very common reason why cards fail, especially in the subscription world, right? It's like if you charge it on the 14th of the month, the day before someone gets their paycheck, there's a high probability that transaction may fail if people are like living paycheck to paycheck, right? So what if we had a more centralized database of when certain people got paid? I mean, it's a little scary when you think of privacy, but what if we even knew how much money they had in the bank account? And then as a merchant, not only could you know when to charge the card, because you know money will always be there, but what if you could know when someone got a raise and you could advertise more products to them? Or what if you knew, you know, just more personal data on a consumer, which would allow you to market to them, sell them more things, and even charge them more for a particular product. So I think predictive analysis is super, super interesting. If we were to almost consolidate like treasury, banking, and payments, there's a lot of information that merchants could know about a consumer or user to know what kind of things they can afford.
A lot of merchants, they're trying to optimize their costs. And cost of processing payments, I believe, especially in America, as you mentioned, is quite high. What are the strategies you would advise merchants to utilize to reduce the cost of processing payment?
Whenever I go in to help consult a company, the first thing I do is I make them provide me 6 months of credit card processing statements, because I want to know what types of cards they're processing, what their actual fees are. And this has been an age-old problem in payments, I would say, is that a lot of merchants actually don't know what they're paying. So the likes of Stripe and PayPal make it easy. 2.9% and 30 cents. You just know no matter what, if you're a small merchant, that's what you're going to pay. But as you grow, you shouldn't continue to have to pay those high credit card processing fees. But merchants are, they're not experts in payments typically, right? Unless they've hired like an internal payments person. You know, if you're building a business software, you're a software person, right? That's your expertise. Payments is typically not your expertise. So I would say as you start to grow, and the magic number for me is usually when you start to process multiple six figures a month in payments. So you start to exceed $100,000 a month in credit card payments, you start to gain some negotiating power. So I would say the first thing you do is you go to your current credit card processor and you say, hey, I'm growing. What can you do to help me decrease my fees? And it's usually wise to let them know you're shopping too, that it's important to you to get the number down. Maybe you do some math and you decide, hey, this is what I want my credit card processing fees to be so that I can start increasing my revenue. And you start calling. I mean, there are, I hate to say it, but payments companies are a dime a dozen in the US, right? Yes, there are very few big global players, but there are many, many ISOs, which are called, they're independent sales organizations, which are ultimately like resellers of the bigger players. There are thousands of them. and you can call and say, hey, I want the best rate. And very often these resellers, they make money on volume. So they don't want to charge you really high fees. They just want to get your volume on their platform. So first thing would be to just negotiate your fees, right? How do you get your fees down? Another thing could be to analyze what types of cards are you processing, right? Because very often you may notice that you might actually have a higher number of debit cards that are being processed versus true credit cards like an Amex or Discover, where it's not actually tied to a bank account. And how do you optimize your fees with your processor in that way to say, hey, actually, I'm noticing most of my transactions are happening with a debit card that's backed by a bank account. Those should be lower processing fees. What can you do to help me there? So really understanding how your processing is divided based on card types, and also understanding where your volume is and where you're doing the most volume can help you in those negotiations. Yes, it's a little self-serving, but I would always recommend someone talk to an expert who understands how to negotiate processing fees. It will save months and months of kind of frustration with a processor to hire someone who has not only good connections with the right processors to help you find the right company to work with, but they can also help you decipher your data so that you can more intelligently talk about what you're actually doing.
There is a what we're witnessing right now is the race of the payment consultant role.
Mhm.
Do you agree with this trend that these days there is more appetite from merchants to to hire a payment consultant, and it's kind of like a golden era for payment consulting companies?
I think so. I do. I get a lot of interest from even venture capitalists who reach out to me and say, I want to invest in a payments company. And these big companies have, the VCs have really smart people who work there, right? These are analysts who study trends and industries, but even they don't have internal experts who understand how complex the payments landscape is. So when you look at what investors are looking at, you also have to think, like, why is this so important? And it's number one, just the number of payment companies that are launching and growing. And again, like, the consolidation of companies is also happening, but also some of the largest payment companies now are thinking of IPOing, right? So people want to understand what they're doing, and why they're important, and also what's the competitive landscape? Like, who else is building a fraud tool that's just like this? So if you think of, if the biggest, smartest entities like a VC don't understand payments, what do you think a small company understands about payments, right? And it's a very large and long learning curve if you're not a payments person to understand the complexity of the landscape and the ecosystem. Because like you said, there's PSPs, there's fraud providers, like there's so many, it's like a very complex spoke in a wheel, like so many spokes of different companies that are related in some way but don't do the same thing. And so yes, payment consultants who have been in the industry 10 plus years usually have a very good view of what works, what are good solutions. And recently I had a project that I worked on for about 6 months, and within the first month of what they paid me to act as a consultant, I saved them almost 10 times that amount in revenue because I helped them negotiate their fees. So if you're wise and you hire the right consultant, there's a huge ROI that can be made by hiring someone, even if for short term, for a few months, to come in and do a bit of an audit. Like, what am I doing? Am I connected to the right PSPs? Do I have the right contracts in place? Am I locked into contracts that maybe aren't advantageous? So even have someone come in for a 90-day audit can be hugely beneficial to companies that want to be more optimized from a payments perspective.
When you work with a merchant, how do you measure their performance, like if they are accepting payments right? What are other indicators that you use to benchmark their payment performance?
I think two of the first things I looked at are decline rate and chargeback rate. So decline rate tells you, number one, like, if you see a huge spike in declines or declines certain time of the month, you always wonder why, right? Are these true declines? Like, the person, the card was stolen, which is a hard decline, right? There's nothing you can do if someone's card is stolen, or if there's fraud, or even insufficient funds. There's nothing you can do about that. But are they failing for maybe kind of false positive reasons, right? Which happens a lot when you have a very robust fraud tool implemented, where a transaction can fail for supposed fraud, and it's actually the person who's actually using their own card and something flagged it, right? A false positive happened. So digging into why cards are declining is usually the first thing I do. And then the second thing is chargebacks, just because number one, you learn a lot about the customer that's buying their product, but you also learn a lot about the merchant themselves. Are you providing a good product that is actually fulfilling what you're promising, right? Are you selling a software, but the software doesn't work? Or there's a bug in the software that you don't even know about? Or two, do you have terrible customer service, right? And people just get tired of trying to get help and they just cancel the service, and instead of talking to you, they issue a chargeback. So declines and chargebacks are very telling pieces of data. You learn a lot about the merchant, their processes, but you also can find things you can do to improve those two metrics very quickly, right? Chargebacks, for example, if they have a high chargeback rate, is I often go in and say, do you make it easy for people to get a refund? Do you have a link or a phone number on your homepage that say, not happy with your product, click here? And also, do you make it hard for people to get a refund? Do you question them? Do you make them get on the phone? Or if someone's happy, I'm just going to issue you a refund to eliminate the chargeback process. So there's some quick and easy changes you can make when these two metrics are high, declines and chargebacks, just by making some small tweaks. So those are the first two things I usually look at to help with optimization, because those things help reputation, but they also can help you potentially retain customers longer. And three, also win more customers if you can fix those two things.
Can you share your secret sauce with us? Maybe what's one non-obvious advice you give merchants to improve their payments performance?
Number one would be, I think my secret sauce is I have a lot of ecosystem payment provider contacts that I've worked with, that I have a very good reputation with, that I've known for 10 or 15 years. And so it can be hard as a fast growing merchant to get a hold of the likes of an Adyen or the likes of a WorldPay, right? Especially if you're still small, but you're growing really fast. Because when you pick up the phone and you call Adyen, you say, hey, I want to work with you. The first thing they're going to ask you is, how much are you doing in processing? That's the first question. And it's their way to vet if you're big enough to work with them and if it's worth their time, if they're going to make money off you. I've helped many merchants that were not yet doing the minimum threshold that the likes of an Adyen would need, but because I had vetted their business model, maybe they had really good investors, they were going to grow really fast within a year, I was able to get them into Adyen, to work with Adyen, where if someone were to have cold called into Adyen, they probably would have ignored them. Right? I've also helped merchants get added customer service because they have challenges navigating some of these big payment companies, right? Maybe you have an account manager, but maybe you don't, and you just don't know who to call. You have a customer service issue. Maybe you're down, you're hard down. There's something wrong with the gateway. You don't know how to fix it. And you're calling just an 800 number to get help and you're not getting a response. Luckily, I just know a lot of people in payments, and I can typically help people navigate something very quickly to help them solve their problem faster than if they were to try to do it on their own.
Right. So the network is a key, right?
It is key.
Not that easy to build.
It is not.
What do you think is the biggest problem in the payments industry right now that blocks us to go to the next level for like the faster, more secure, less fraudulent, less expensive payments?
Yeah, I think number one is from a fraudulent perspective, fraudsters are just getting smarter, right? And similar to the conversation we had previously about this concept of AI, you can mimic a person. AI can generate an image. AI can generate a voice, right? Like these are all, as much as technology is being developed and improving, there are these other technologies that are good and bad. And I always have felt like AI has a good side and a bad side. And the bad side is fraudsters are going to get more intelligent. So we just have to make sure our fraud tools are keeping up with what the bad fraudsters are doing, right? But I will go back to the original part of our conversation, which is I still think a big challenge in payments is that it's very expensive to use credit cards from a merchant perspective. This is something merchants are trying to solve every single day. And merchants are getting savvy and they're realizing, okay, if I can't get my credit card fees down, what other payment method can I use? And gaming companies actually have done a phenomenal job at this, because gaming companies process very high volume but with a very low ticket. So they have been trying to solve this problem for many years. And they basically have said, hey, alternative payment methods is actually the best way to do it, right? So they have various digital wallets they implement. They have non-US based credit card payment methods. They want to implement the likes of Venmo even as a form of payment, or Cash App, or, all these different ways that are not tied to a credit card. We are going to continue to see the people, merchants, try to find ways to implement those ways to pay because they're very inexpensive. I do think too is, processing payments, there's so many elements to processing payments, right? We talked a little bit about interchange. That's only one piece of the payment stack from a cost perspective. You also have gateway fees, which are 5 or 10 cents a transaction. You then have fraud fees, which are 5 or 10 cents, or if not more, transactions. So merchants, I think, often feel like they're being nickel and dimed because they have to add all of these added tools to actually have a very robust payment stack. So again, kind of going back to that consolidation conversation, is how do we make payments less expensive for merchants? And I think we have to see some consolidation of, hey, if you process with this particular provider, you're going to get fraud tools for free, you're going to get gateway fees for free, because at the end of the day, there's a reason why the likes of an Adyen and WorldPay are these big multi-billion-dollar companies that make a lot of revenue. But how can we give more money back to the merchant so that they can continue to grow?
Okay, what if our listeners want to reach out to you? What's the best way to find you online or contact you?
I have a few different places you can find me. One, you can find me on LinkedIn. So Jenna Wyer, last name is Wyer. And you can also find me at jennawyer.com. And that website tells you lots of the different projects that I'm working on. But jennawyer.com is a great place to find me.
Thanks, Jenna. It was definitely a pleasure. I think we touched a lot of interesting topics, and it was great to having you on this call.
Thank you so much for the opportunity.